Payrolls, big blowout jobs report is good news when you're seeing this repricing in the bond market.
First of all, it was 1 month. Look at all the prior months. How many downward revisions have we had? I'm not saying it wasn't a good number. It was an outstanding number, no question about it. But when you look at the employment data around the ISMs, both manufacturing and services, they were weak. So which is it? Which has it right? Time will tell. But the inflation question, as you've all just been discussing, is back on the table.
So, Bob, it just raised an important question. Which one was the head fake? The summer deceleration or the re-acceleration coming out of the summer?
I think they're both true. Economies don't move in one direction nonstop. I think we're going to have this fits and starts. Some people call it a bumpy landing. I like that term. And I think that's what we're in for. It's going to be a good number and then a not so good number. And it'll confuse all of us.
Yeah, great, wonderful. Great to hear that, Bob. I know in the meantime, you are looking for a significant economic slowdown or mild recession. That had been at least your base case scenario. If this is just 1 month, does it change it at all, Bob?
It certainly lowers the probability of us getting that right. When I look at all the statistics over several months, to me, it's still pretty clear that the economy is slowing. We're seeing that in many of the employment numbers, notwithstanding last Friday's. We're seeing that in ability to find jobs, people trying to find full-time jobs, settling for part-time jobs. Economy slowing. We just don't know how fast that's happening. And of course, the Fed has seen some of that too. We got 50 basis points, but their number is still very high relative to other things. How many things can you find that have nominal growth as strong as the Fed funds rate now? So it is leaning on the economy even with this cut.